This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the TF Metals Report podcast highlights for the week of October the 11th, 2021. A week that began rather quietly with the U.S. bond market, government institutions, and banks closed for the Columbus Day holiday. But we, of course, had a daily podcast at TF Metals Report. That's something we do every single day for our subscribers. And as a part of that podcast on Monday, we took a look at the dollar index. Of course, that can provide a headwind or a tailwind for the precious metals. So we got to always keep track whether it's in an uptrend or a downtrend. It's currently in an uptrend, as you can see on the next chart. However, it looks like it might be ready for a pullback, and that was something we discussed on October 11th. Speaking of the dollar index, as I mentioned earlier, I didn't put the RSI on this chart, and we'll talk about that tomorrow. But this is clearly the channel. These are parallel lines, all right? And it is from that initial surge coming out of June 16th in the June FOMC, where the dollar index went from 90.50 to 92.50 in 3 days. And we've been in the tank really ever since. Well, this is clearly the channel, right? So the dollar index has yet to close above this channel, a lot of times closing right up against it, 3 or 4 occasions. Let's see, how many times has it traded up above it? And now 1, 2, 3, 4, 5, 6, 7, 8 times. It's traded above the red line intraday and not been able to close out of it. So what I'm wondering now is if we'll get a rally later this week, tomorrow, Wednesday, that again comes up to this line or slightly above it. Maybe 94.75. Remember that level? That's that low from February of last year, and then, became resistance after we broke down through there into the summer of last year. Well, what about that? Maybe we get that final intraday punch to 94.75 with a wick of the candle that hangs out above it later this week, and then you fall back. And then maybe, again, the RSI for the dollar index doesn't make a new high while the price of the dollar index does. That would be a negatively divergent high and a sign of a top. And then maybe we can start going down. That's a lot of maybes, brother. I understand that. But if you're looking for something to hang your hat on that can get silver to get a bid and get back above 23 and get gold to get a bid and get back above 1780, we got to have this dollar pullback. There are a lot of things to discuss on Tuesday, October the 12th. And one of them in our daily podcast was, of course, COMEX Digital Silver, trying to put in a reversal and a bottom on the chart, but it hadn't done so yet. But again, that was a topic of discussion on Tuesday, October the 12th. Look at silver, though. Again, this is a very clear and obvious trend line that goes back to June 16th, the June FOMC meeting, connects the chlamydia highs of August the 4th, the post-BLSBS highs of September 3rd and September 7th, and now, running parallel to a sharply falling 50-day moving average. Now look, the 50-day moving average isn't going to zero, right? So eventually we're going to intersect it and get back above it. So why not do that next week on the dollar falling? And if that's the case, you get above 23, get above the 50-day for the first time since June the 16th, okay, then we'll have something to talk about. Then we'll be talking about, oh, wow, we could go 24, 25. Now, 22.50 to 25 is a 10% move. That is something you can trade. So we're going to watch, again, all of these puzzle pieces to see if they connect over the next, 72 hours or so. With the high inflation data on Wednesday, October the 13th, the U.S. dollar did pull back, and the precious metals rallied. We noticed something both encouraging and ominous on the chart of COMEX Gold, and that was a major topic of discussion on Wednesday, October 13th. Check this chart of COMEX Gold. Again, remember, we've been tracking downtrend and the falling 50-day. The only other time gold got above its 50-day was capped all through July into August, right? You can see that on this chart. Got above there briefly in late August. Broke above where I've drawn this trend line for a day, September the 3rd, BLSBS day, 6 weeks ago. And then immediately was reversed. Now, why did I draw this line here? I have not been drawing this line here, but this ain't a bad line. Why? It starts right at the peak, 1st of June, goes through that peak about 10 days later. And then after that, how many peaks do we catch? I mean, these are intraday candle wicks. Let's count them. 1, 2, 3, 4, 5, 6. 6 through last week. So now we're connecting 8 candle wicks. Do you think that's a good trend line? Yeah, I do too. I guess giving further credence to that, again, soaring up through that trend line to that 1836 resistance back on September the 3rd, and then immediately getting reversed and smashed back down the next trading day, September the 7th. So, do you think what happens tomorrow and Friday is going to be important? Yeah. We could easily get reversed again, just like we did on September the 7th. Get all the way back down here to 1770, down 24 or something tomorrow. Back under the 50-day and everything else, just like they did to us on September the 7th. But what if they don't? What if we keep rallying tomorrow and Friday? Finish the week above 1800. Well, then all of a sudden we're going to be talking 1820 and another stab at this 1840. And above 1840, everybody's going to say, okay, the low is in. We had that double bottom in March, the other double bottom in August at 1720. Okay? Remember we counted the days between those double bottoms? 18 days in March, 36 days in August and September, 8 days up, 8 days down in March, 18 days up, 18 days down. And then look at the rally from the end of March all the way those 2 months into the 1st of June, 1680 to 1920. That's $240. $240 off of 1720 this time would take us all the way up to 1960 by the end of November if we did it again. So it's very important what takes place tomorrow and Friday. Will they be able to reverse us like they did back on September 7th? Very, very interesting chart right there. Something else we've been following all week is the price of copper. You no doubt know many industrial metals, from iron ore to steel, aluminum, now zinc, tin, you name it. All of them have been surging in this inflationary, stagflationary environment. And what we're starting to wonder is if copper does the same and blasts out to new all-time highs, starts moving towards $7 and $8, how could silver not be next in line for a massive surge? Well, we're not there yet. Copper's not yet to new all-time highs, but it's getting close. And that was a topic of discussion on Thursday, October 14th. Let's start with copper. That's the next chart on this page. Because it was just, I don't think it was yesterday. I think it's 2 days ago. Yeah, it was 2 days ago, because I recognized that little red candle there. It was 2 days ago in your Tuesday podcast, when I said, man, everything else has had its time. And I listed them again earlier in this podcast. What if copper suddenly explodes? What if copper surges through those highs earlier this year, up near 480, and starts trading with a 5? How quick could copper go to 6 or 7? And if that's the case, at what point does the same thing happen to silver? So, isn't that interesting? Look at copper. Highest daily close in copper since early June. Watch copper tomorrow. And on Friday, the concerns we expressed back on Wednesday have indeed played out. Just as back in early September, when the price of gold got over its 50-day moving average and its trend line from June the 1st and was immediately reversed, that's happened again here today. Price was smashed beginning in London, driven lower, and then once we got into the COMEX, smashed again. Again, when you are up against the bullion banks, the ones that monopolistically control the pricing scheme, well, you're still apt to having this sort of thing happen. They are doing everything they can to keep the downtrend in place that has managed price lower all through this year. It won't go on forever. All downtrends do break eventually. But man, the banks won again today, keeping that price going lower and again reversing price just as they did back in September. And we'll see where we go from here. All is not lost. Many other metals, industrial metals, are surging to new highs. Zinc today is through the roof, and copper is getting very close to making new all-time highs. If copper does as zinc and aluminum and iron ore, as steel, and surges to $7 or $8, it's going to get very, very difficult for the banks to control silver and, by extension, gold. But that's a topic for next week or maybe even next month. For today, though, what a nasty end of the week with the banks just doing their thing, manipulating price lower as they often do. Have a great weekend. We'll look forward to another volatile week next and another one of these podcast summaries next Friday.